Ever got the perfect setup only to get stopped out before it goes to your TP and you lose money? You might be trading at the wrong time. In this video, I will show you how to sync your entry model with the correct time where smart money moves as well, using only two key components. I'm DionTrades, full-time trader with over $1 million in funding, and this is how you stop forcing trades and start trading like a sniper. When learning ICT, ICT talks a lot about time and price. You know everything about price. You know how value gaps work, how order blocks work. You know the ICT basics, but combining it with time is what sets you apart from losing to winning. And time and price is very simple. Time is when do you trade, combine it with price. How does price go to the target? And why do you need to use time and price together? Well, for three obvious reasons. When combining time with price, you can have a better risk to reward, you have a better win rate, and you will trade with less emotions because it's less random. You restrict yourself to certain times of day, certain periods where you know high probability setups will appear. And now let's dive more into time and price, starting with time, the when. To understand time, you need to understand two key concepts. One is how to trade news, the red folders, and how to use kill zones. And when we talk about news, we're talking about the red folders. The screenshot you see here is on forexfactory.com. You can filter on the red folders. And I have a very simple framework you can follow to trade news. And it's the following. Trading before high impact news is low probability. Trading during high impact news is gambling. And high impact news are red folders. Trading after red folders gives you the edge. Why? Before red folders, price will manipulate and create liquidity, most of the time on both sides. During, your risk profile will not be followed because price can just wick one side or the other without you having any control over it. And after the red folder, the market showed its hand and it becomes obvious where price likely wants to go. So try to aim to wait out the red folders. And one very important additional rule here is the three big boys. NFP, CPI, FOMC, never ever trade the session before it. NFP and CPI are most of the time in New York AM session. That means London session, you skip. FOMC is in the PM session, in the afternoon session. And I would definitely recommend on FOMC days to maybe skip both London and New York. At least New York AM, skip it. Personally, when there's no news, I heard other traders just don't trade at all. I think you can trade, but you should just have lower expectations. Know that it can be a lower volatility day, meaning more consolidation, tinier range, and you want to make your money with the expansions, the big ranges. So when there's no news, low expectations. Next to news, also combine kill zones in your trading. That means trade in a kill zone, not between those. For Asian session, if you trade Forex, Asian is from 8 till midnight. This is all in New York time, so EST time zone. You have London sessions from 2 to 5. You have New York AM from 7 till 10. And you have London close from 10 till 12. If you trade indices like NASDAQ, yes. Asian session and London session is the same. The New York session is a little different. The New York session starts at 8:30 till 11. And the PM session is from 1:30 PM until 4. And if you want to be really nitty-gritty, you can also use the silver bullet windows. Those are the highest probability time windows where you can execute your trade. And in London, it's from 3 to 4 AM EST. New York AM, it's from 10 to 11. And London is from 2 to 3 PM session. That means between midnight and 2, definitely no trading. Between 5 and 7, no trading. And also maybe the New York lunch, maybe skip it because you want to know when to trade. You want to restrict yourself on when to trade, when your high probability setups will occur, because that will give you the edge, the higher probability setups. If my own trade models appear outside of a kill zone, I'm very suspicious, and 9 times out of 10, I won't take them because I know it's probably going to be a manipulation. They're going to fake me out somewhere. They just invite me in, but you are experienced enough to know that you need to trade with the kill zones. And especially as a scalper or in-trade trader, use the silver bullets and make your life very easy. So now you know time and price, time, news, after red folders. Don't trade before the three big boys, NFP, FOMC, CPI, and when there's no news, have low expectations. So now you know how to trade the red folders. Awesome. Kill zones, you know when the kill zones are. When you trade between the kill zones is low probability, and maybe you can refine your entries into silver bullet windows only. I spent hundreds of hours studying ICT concepts, and I broke down every single concept with my own personal notes in this 500-page PDF. It goes over everything, from entry models to the different concepts, from interest rates to everything you need. So if you want to save those hundreds of hours, want to get it right now, I will leave the link to this PDF in the description. So now you know time. Let's talk about the other side, of this coin, and that's called price. And price is the how. How does price deliver to the target? And to simplify your trading, just understand these two concepts. One is, on the left side is the AMD, accumulation, manipulation, distribution, the power of three, the Judas swings. It has many fancy names, it's all the same. And you need to understand the simple structure of a candle, the open, low, high, close. If we dive deeper into that, starting with the AMD, the accumulation is right here in the blue zone. Price does nothing. In an intraday basis, that's most of the time Asian session. Then you have the manipulation. It's the fake move in the opposite direction of the target. So if you have a bullish bias, that means you want price to go up. The manipulation phase should go the opposing direction to the downside. Manipulation. And then when that has happened, the distribution phase will start. And the body of the candle will be created. It will be the distribution. And a pro tip here, if you are bullish, not only use the AMD, but also mark out the midnight open. So let's say the midnight open was around here. Then your goal should be to buy below the midnight open for your most high probability setups and your best risk to reward. Vice versa, if you think you're bearish, try to sell above the midnight open. And if you combine the AMD with the power of three, especially intraday, but also for scalpers, this is where your highest probability setups will occur. Because when you expect a bullish candle, play a bullish AMD. Let's say this is a daily candle. That means midnight open, we manipulate to the downside, then we start creating to the upside, to the high of the day, and then we go lower during the close. And intraday, most of the time, it is Asia, accumulation, London, manipulation, and New York is the distribution. That's why trading New York session only is pretty high probable. If you have many losing trades in London, just only trade New York kill zone. Because when you arrive in New York session, let's say on Forex, 7 a.m. starts, let's say here, you already have seen the London move. So you know, okay, probably the London move is already the low of the day. So I can just wait out the retracement and take a long from there. And a pro tip here, the manipulation, the move lower, needs to happen towards a higher time frame key level. So for example, there is a big fair value gap resting here on, let's say, the 4 hour or the daily or somewhere on the higher time frame. When intraday we trade into that, there is the place where you need to expect the reaction. And how to anticipate bullish or bearish candle, because it's nice to know, okay, I know what the AMD is. I know what power 3 is. I know how to use this, open, high, low, close. But how can you now see how to determine if it's going to be a green candle or a black candle, down close candle? And there is where daily bias comes in. I won't waste your time here to go over the entire framework. There's a dedicated video here on this channel. I will leave the link to that somewhere here in the description or somewhere here so you can watch it yourself. So you can anticipate if the candle is going to be most likely green or black. And when you cannot determine it, it's not a good trade. Once you have a daily bias, here is where time and price will make you all the money you need. Maybe you recognize here, there's no fancy setups here. There's just two very simple concepts. Time, where we use news and we use kill zones together with price with a simple intraday accumulation, manipulation, distribution using the open, high, low, close. That's it. Now let's look at some examples how you can use exactly these concepts to make money. So here we are at the Euro US dollar on the 5-minute chart. And what do you see here? First thing we need to mark out is the midnight open. And the midnight open is all the way here. It's going to be our midnight open. And based on a daily analysis, we expect this day to be bearish. So we're going to try to play a bearish AMD. So what do you want to see in London session? First, kill zone. We have here the London session. We see some accumulation here. So when I see this happening, I try to mark it out as accumulation. I won't mark this out on my charts the whole time because your eyes will be trained to see this over time. For the example, accumulation. Then we move upwards. But we have a bearish bias, making this setup probably very interesting. When we see this happening, we just anticipate this to be a manipulation. So let's mark it out as a manipulation. Let's see what happens. And if we look at time and price, remember, we want to see that AMD happening in the London kill zone and especially the silver bullet, 3 to 4. So now let's see what's going on here. So we made the manipulation, we move up, we start seeing some displacement and just simply follow the fair value gaps. I see a fair value gap right here. Let's see that one holds. I'm not going to take any entry here, but when we see this happening from the fair value gap, that is where you need to pay attention. Now we have a very simple bias. If you remember from the liquidity video on this YouTube channel, we see this as low resistant liquidity. So these lows are going to be ran without any trouble. And it's very nice because we want to target it. We want to target easy money. What do we see here? Not only do we have a accumulation here, manipulation, and potentially a distribution, what we're going to short. Let's see what premium arrays, bearish arrays, we can frame our entry around. But already here was a bearish fair value gap. What I also see is this down close candle, high, low, higher high, lower low, making this a bearish break. Also, we have a massive order block here, as well. So let's mark out a bearish order block right here. Why is this a high probability order block? Because these up close candles trade into this fair value gap. Also, there's a second fair value gap here created. So in this area we are now analyzing, that could be a very high probability area where we can take a short from. So I would then take the short from the start of this fair value gap. I stop above this swing high. Why above this swing high? Because we already have a breaker, two fair value gaps, and an order block respecting this area. This should hold. Of course, you can also place your stop loss above this high. But let's say if you want to target these lows, it's a 1-to-1. I don't like to take 1-to-1s. I like to have a better risk to reward. So what I like to do is put my stop above this high and just for a static 1-to-2. And then let's see what price gives us and how we react from that area. So here we see that we have some drawdown. We still respect the mean threshold of this order block. So when you're in this trade, this is no like perfect example, you will be uncomfortable seeing these candles happen because you are in drawdown and maybe you're like, oh shit, I'm gonna lose this trade. But have faith in that you simply playing an accumulation, manipulation happening in a kill zone, and your setup will occur in the end of the London session. Let's see what price gives us. See how we react from the midnight open. This is not a random level, guys. Mark out your midnight open. So here again, end of London session. So this is between the two kill zones. There's nothing to do here, but this is also uncomfortable, right? Because you're like, oh no, it was almost a TP. Now it's coming back to the entry. You need to have faith. As a professional trader, you don't panic here. You just wait. See, the worst thing that can happen is that you get taken out here for a -1. If that -1 was too big, you need to fix your risk management. If you take a -1, who cares? You just or have a -1 or a +2. The only thing that you can control is taking a banger of a setup, and this is a good setup, no matter if there's going to be a -1. Cool. End of rant. Let's continue. And here it taps already the TP point, comes back, takes some liquidity, then moves lower. So eventually, even if this didn't take you out, eventually at the London close, it went to the TP point. So 2 times here, let's say you didn't get filled here. So let's say the TP was here. 2 times your stop almost came back to the entry, making you panic. But this is here where your professional mindset needs to come in. No micromanage, just hold it. So using time and price, there was no news. So low expectations. We trade inside the kill zone. And what do we use inside the kill zone? The basic accumulation, manipulation, distribution, because I have a bearish bias with low resistant liquidity here, and using multiple premium arrays, bearish arrays in a single area to take the entry, bearish breaker, bearish order block, and a bearish value gap here on the 5-minute. Cool, so now we saw a time and price happening on the London session. But now let's look at an example where this happens in New York session. And when you wake up to this price action, we see the liquidity have been taken up there. Then this is on the daily time frame. So on a daily, we displace lower with a daily bearish value gap, and we have relative equal lows resting here. So what do we have here? We have a starting point, and we have a very clear target. So from this point, we just drop to the lower time frame to see if we can find some form of entry model around this. So when this happened here on Wednesday, well, potentially a fair value gap created. Yeah, a fair value gap created. That's nice. So let's mark this out. And here we start the day. So here it's Wednesday. London session is about to start. So we have a 4-hour fair value gap. We also have an overlapping 1-hour fair value gap. What I also see is we have a range created, premium and discount. So ideally you want to short from here towards this area. So using this, let's just drop to the lower time frame. Let's do the 50-minute this time to see if we can frame an entry around this. So what time is it? It's now a midnight open. Let's mark out the midnight open. And now let's see what price gives us. So here we have the London session is now starting and we are accumulating. You see this? So when we have a bearish buy, what we want to see is accumulation. We want a manipulation into ideally premium of the range in that overlapping 4-hour and 1-hour value gap, and then see a reaction on the lower time. So now we have the end of London. So London have accumulation. I'm not going to mark this out again. You guys see the accumulation. Then we have the manipulation higher. And from this point, let's see if we can find for value gap, if we can find some structure. So we have the premium of the range. So this could be a local high. And now we are approaching New York session. So here is where we need to pay attention. So what do we see? We see a first fair value gap here on the 15-minute. See that holds? No, this one doesn't hold. Now we are in the kill zone, 9 a.m. So let's see what we do now. Now we start to displace lower. That could be the start. So that means if you want to take an entry, let's see if we have a value gap. Yes, we do. Right here. What I have here, an order block. Let's see what price does. Price goes into it. And here you could already take the entry. I can understand this doesn't look too pretty. If you do this, of course, it will be a nice trade, right? Nice 1, 2, 3. Let's wait one more candle more. Personally, I like to wait until we see a candle close below it. So let's see next candle. And if you zoom in here, guys, this is where you can take the entry. Why I would take the entry here? You see a swing high created inside this 50-minute bearish value gap. Also, the bodies are respecting the consequent encroachment of 50% of this fair value gap. So at this point, at the end of this candle, I would take my short. Here was the close. I would put my stop loss above the high here, and I will put my TP at the relative equal lows. Remember that relative equal lows on the daily time frame. So now we are playing a reaction from a daily bearish fair value gap. On a 4 and 1 hour, we see another fair value gap created. Price comes to premium of the range, starts creating sell structure, and all that is coming together with a clear accumulation in Asia and London, manipulation inside New York session, and let's see if we can start distribution during the New York AM. And there's another. So let's say you missed this entry. Let's see if you have another fair value gap here. You've been tagged in here at the PM session. So you're already approaching end of day. So this is probably going to be an overnight hold. Let's see how fast we move. Chill around here. We see how strong we want to move to the downside. And this is not because we take some random intraday setup, guys. We take it from the daily, 4 hour, the 1 hour, and then a 50-minute sell structure with that simple concept of time and price. Now you might wonder, how does liquidity work? How to find daily buys, fair value gaps, order blocks? Well, good news. I got dedicated videos to all of these concepts here on this channel, so you can get profitable yourself. I'll leave the link to the videos in the description below.